How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. Just wanted to show a quick trade idea that we took last night. When I say we, I mean with my community. So last night, I saw price run the Asian session low, also taking out that 20-day low. If you are familiar with the IPTA look back data range, or you saw the daily update for AU for the month of March, you can see that it ran out that 20-day low while simultaneously going into midnight. It ran out that Asian session low, and after that, there was a quick repricing. So let's go on the 5 minute to see it a little clearer. So if you look at the 5 minute, on the 5 minute chart, it runs out that Asian session low, and after taking out that Asian session low, we got this swing high up here. We got this one here, and then we got this one up here too, right? This one's more of a major one up here because it's in between, right? There's a swing high here, and there's a swing high here, and this swing high is in between those two. So we got this one, this intermediate swing high. Price comes up, takes it out, right? That's that change in delivery right there. Would have been a bullish order block. This last down close candle, that would have been a good buy opportunity. But I went long at the Asian low break. That's my simple way of getting into the market long. If I want it to be bullish for the day, I see the Asian session low rated. I want to buy at the low or below the low, while also buying below midnight opening price because that's our fair value for the day. True day open, anything above midnight is premium, anything below is a discount. So you got that buy cheap, right? Ideally, logically speaking, it's a better buy. Why would you want to buy above 12 a.m.? Not saying you can't find ways to input yourself into the trend if it's going to keep going, but your best case scenario to get the best buy, the pinnacle of all buys, it's got to probably form below 12 a.m. and also below the Asian low. So if we play that forward, go into London, we get some type of retracement, and then price runs up higher. And we can even take a look at London too. Or if we were to take a look at London session, let's say we go down to the 15-minute chart. Right, we go to the 15-minute chart. Take this off. This off. And take this off. You can see it runs some type of sell side again, right? Between midnight and before 2 a.m., it runs this swing low. Runs the swing low. It even trades back down into a fair value gap, some people may say, or even a bullish order block, right? This large last down close candle before price came up and changed structure. This down close candle here. But if I kept it in the way I like to look at it, very simply, midnight to 2 a.m., there's a dead zone. Market is going to utilize that period in between the kill zones to find buy side or sell side. It ran sell side here. After taking out that sell side, we could possibly go down on a lower time frame and see what occurs there. Let's take a look. Go down to the 1 minute chart. And we want to see if we get a swing high that's ran through with a fair value gap. We got one here. This is the one I'm looking for. This also forms below, look at this, very crucial, forms below 2 a.m.'s opening price. 2 a.m. I start my London kill zone at 2 a.m. So 2 a.m. price drops below, runs out sell side, creates this fair value gap that runs through that swing high. There's that swing high. Hopefully you guys can see it. Very colorful on the chart right now. And that's where I would potentially load my longs in a cheaper area for that kill zone. Play it forward. Price comes down into that. You're going to go long in that area with a stop loss, whether that's 10 pips, 15 pips. Generally, I go for a 15 pip SL. So it would look like this. All right, 15 pip SL. That would be my stop loss. Play it forward. You can see price gets up to that Asian session high TP hit. That's a very generic way of me trading. It's my bread and butter, in my opinion. Other people may disagree. They have different methods of trading. I never knock other people's methods of trading, but I always want it to be simple enough for my audience or people that I am showing to digest. I want it to be very systematic. So we didn't get a double confluence idea, but we did get some type of double confluence with the monthly opening price. That's it right there. It's below the monthly opening price. It's below 2 a.m.'s opening price. It's not below 12 a.m.'s opening price, so it's not bad. And I also think is it below Sunday's opening price? Where's Sunday? Yeah, it is also below Sunday's opening price. So we got that double confluence for this kill zone buy opportunity. You were in some drawdown. Best believe there are going to be some trades you take that are going to pull you into drawdown. Price pulls up, takes out that Asian session high. So we went from one side of the Asian session to the other side. Sell side raid, buy side revert. If we play it forward, let's go into New York session. I didn't trade any of these kill zones. Just going over it, just studying it. Because normally when you go back and study it, it teaches you things. Right, we got the New York session. New York session going to 15-minute time frame. And you can almost bet that same sequence, fair value gap through a swing point, happened here. Fair value gap through a swing low. So between 5 a.m. to 7 a.m., another dead zone. I wouldn't trade there unless you're in a trade prior. Let's say we take this 15-minute high, this candle's high, call that there, and that's a raid. Let's say we're calling that right there a raid. If we go on the 5-minute, it's probably a swing high. Right there, we got a raid. Let's bring it back to that raid and see what happens. Let's study it. Let's go down to the 1-minute chart. Right, we got that run right there. Go on the 1 minute, study that price action there. So you take a look. We got that run on that high here. That 715 candle. Price is now most likely either going to continue trending up, move sideways, or sell off. But since we got a buy side raid, we're in a premium too. Look at where we are in price action. We're above the monthly opening price or also the weekly opening price. We're above 12 a.m.'s opening price. We're above 7 a.m.'s opening price. So some things start to line up for these scenarios. This is 7 a.m. There we go. Nice. 7 a.m. So let's take a look to see if we get that a strong fair value gap through a swing low. And we do. Look at this. Same thing again. This same sequence I really love. Some people might say there might be a breaker or mitigation here. Everyone has different views on the chart. Look at that. That's that strong impulse to the downside through a swing low. So the scenario would be sell. Right? If this is what you were looking for. I'm not saying I would have, but when you go back to study it, you can start to see these ideas. Oh, why did New York session sell off? How could we potentially have caught that idea? Play it forward. This is also a 15 pip for 15 pip idea. So 1-to-1 scenario. So that would have played out really well. But notice how that very fair value gap with the swing low was the determining factor for that trade idea. Selling in a triple confluence idea. So it's above 7 a.m., it's above midnight, it's above the monthly and weekly. So you got pretty much a great sell opportunity here. And it sold off pretty deep going into London close. Sold off back into the monthly open, below the weekly open too. Traded back down into midnight opening price. Look at this. Did it? I thought it hit it. I guess it did not. And this is where we are currently in price action. So there's trade ideas that happen. You're not going to catch all of them. I didn't trade London. I didn't trade New York. I simply traded the break of the Asian session low, go long, hold. I didn't get to my final TP. It is NFP week, so the market can be range bound. So be careful. Don't be greedy. Take partials. Hopefully you found this insightful. Peace.